The 4-step method to high performance trading is a free download to help traders build their mindset routine to improve their trading performance in live time. The 7-step daily routine for high performance traders is about developing the daily routines and processes to help traders continuously develop and get 1% better a day in all areas of their life. They are both free downloads. The links are in the description box below. Let's get started.
Good day, trader. Stacey Burke from Stacey Burke Trading. Today, carrying on our theme of simple rinse and repeat setups and focusing on understanding the opening range, initial balance, and the basic templates that show up on any instrument on a week-to-week basis. And then how that can offer us 3-day setups, high of week to low of week, or high of week to low of day, and vice versa. 3-session setups. But critical to understand a new month, new timing cycle, the opening range and initial balance. And then we can look at our signals for breakout traders being in the markets. First red day opportunities, first green day opportunities, signal day, the inside day. In the playbook, we talk about the importance of understanding timing, and we have a new month, new timing cycle starting. And we're going to be heading into a new year also, but this week in particular, we have the new month beginning, and we're going to look at basic templates. Again, just basic templates that rinse and repeat on any instrument. On page 22 in the playbook, I talk about self-sabotage, and the reason why I want to just mention this is that garbage trading comes from minutia, trying to catch trades. Garbage trading is 50-50 trading. I repeat this. You make a lot of money on the setups and the days where it's easy to make money. Unless you understand the basic rinse and repeat templates, you're going to continue to struggle trying to catch moves and get trades and grab the high and grab the low. And in reality, those are continuously 50-50 trades. We're talking about identifying 90-10 opportunities that you can scale into that rinse and repeat, not trying to read tea leaves and figure out where the market is going to go. It's whether or not there's actually a trade setup, regardless of where the market is going. Go back and reread this section. Garbage trading is why most traders will lose and never be consistently profitable. Get off of the tea leaves and start focusing on rinse and repeat, easy money-making setups. Now, Monday is our opening range in a new week and a new month, our new timing cycle. And that forms our initial high and low of the new week and the new trading month. Tuesday, day 2, typically expands the range, and that forms now our initial balance, Monday, Tuesday. In a high percentage of situations, one of those two extremes will tend to hold, and our new boundaries for the new week are established. Remember, we're here to identify templates and setups where it's easy to make money on. You notice I wasn't worried about trying to catch this high or grab the low or catch this move. We had major impact, high impact red news on the calendar. Now, if we were in any of these moves, we may be in a nail and bail situation. But remember, I'm talking about identifying opportunities that are ACB. Remember the playbook. First red day, first green day. I'm not counting little pushes, worried about gaps, catching moves, or sweeps, hunts, counting little bars on 1-minute charts. I'm talking about identifying the larger time frame template for easy money-making trading setups. The reason why I emphasize those points in today's videos is that a lot of misinformation, a lot of questions about stuff that is not related to what the playbook best trade setups actually are. We're talking about identifying setups that are easy to make money on, not trying to get in on every little movement of the market. Sitting back, identifying the opportunities, and allowing the market to set up and show us its hand. Which is why I constantly repeat to traders, which setups are you hunting? I'm not inside of these little bars worried about why didn't I get that movement right? Why didn't I catch the move? Why didn't I identify the swing or the high or the low? Let the market set up and understand which setups you are hunting. There is nothing vague or esoteric about sitting back and letting the market set up. I talk about if you can count to 3 and tell time, you can make a lot of money. I talk about day 3 and 3-session setups. Now, I also have mentioned the phrase, train your eyes to move horizontally at the levels on the day in the session that you're trading to identify a high probability trade setup opportunity. I also talk about a daily level until it's broken on the opposite side does not start a new day count or confirm a market as a false break. A 3-day setup is when we have a market where we can make a new day count. We have breakout traders on Wednesday, the midpoint range of the week, confirming Tuesday as the new low of the month and the new low of the week. Day 1, day 2. We're now at the high of the month in a new month on Thursday. And when we come to our US session, we have a peak formation made in Wednesday's US session. That's our first session. Asia is inside. London puts in a peak formation high before making lower lows. When we come into our US session, and in our third hour, 10 a.m., we have our reversal set up at the high of the month, the high of the week, in a new month on Thursday on the backside of the week. All major red news has been digested, and at 10 a.m. we have our entry into a high of the month, high of the week, reversal setup in a market that has broken out of the high of Tuesday after making lower lows on the inside. When Thursday closes, it closes as a first red day, a day that closes after making a peak formation high of the week, high of the month, below the open. Carrying into Free Cash Friday, we're back inside of our breakout level. Again, thesis into the session is a pump and dump template. We'll look at the shorter time frames in a moment, but I want to paint out to traders simple rinse and repeat. There is nothing complicated, obscure, or vague. I'm not worried about little bars. I'm looking at the larger template. This is an all-in opportunity. And then the continuation trade on Friday, the low-hanging fruit after a first red day signal on the backside of a pump and dump template, new month, new week, new timing cycle. Basic, simple, rinse and repeat templates. We have our entry, our managed risk, and our profit target, or a hold till close, or even into the backside if traders want to leave a trailer with the thesis that we are returning back to the low of the week. Nothing complicated, simple rinse and repeat, zero stress, zero emotion, zero thinking, and once the market breaks through the level, zero management. And that's how simple this should be. There's no other complicated counting, measuring, gaps, hunts, sweeps, little bars. It's simple. Keep it simple. It's a pump and dump template with a high of month, high of week shorting opportunity in the timing window based on a simple rinse and repeat template. Thursday was our first red day signal. We had non-farm payrolls at 8:30 a.m. New York time. New York Open gives us a pin high before breaking down at the end of that second hour after New York Open, making a lower low on the inside and then pumping back up into our third hour and an 11 a.m. collapse in line with our first red day thesis. So traders who may have positioned themselves in early, no problem. They just had to sit through a bit of chop. And it's non-farm payrolls Friday. So when we have a non-farm payrolls Friday, week one in a new month, there may be some volatility. But in line with our larger time frame thesis, the pump and dump template about returning to the low of the week, once that market traded sideways, putting in lower lows and pumping back up, the 3-hour window volume is trapped up high for the collapse into the low of the month, the new month, and the low of the week, into the close. In the closing range of a new month, a new week, and closing out the week at the end of the session at the low of the month, an all-in ACB opportunity. A template, a Monday, Wednesday, Friday template. Opening range, initial balance, signal days, 3-session setups, and keeping it simple. Sitting on our hands and letting the market show us its hand. A first red day pump and dump template on the Dow Jones 30. Important to train your eyes to move horizontally at the levels. And as the market continues to move in line with our thesis, again, training your eyes to move horizontally at the levels. In the timing window, hour 1, hour 2, hour 3 for the collapse back down to the low of the month. The NASDAQ 100 on Monday, we had a market that created a rectangle, a smaller box heading into our U.S. window that broke out of the consolidation, and our U.S. Open opened at the high of the month, the high of the week, in a parabolic range expansion, a day one runner. And we've talked about not counter trending a day one runner, because that's where markets can continue to expand the range. And we may be in breakout now, and traders are trying to counter trend this because it's at the high. They want to catch the high or try and grab the high in a market that is now potentially on a range expansion on day one in a new week, a new month, a new timing cycle. The market on day two continues to expand the range and again closes in breakout for a second day. And on Wednesday, our midpoint range of the week continues to climb higher, closing in breakout for a third day. Now we have 3 days of breakout traders triggered into the market on the front side of the week. This is a range expansion, new month, new timing cycle. We have 3 days of breakout traders. Now on Thursday, this market has 3 days of breakout traders triggered in the market, but does not hit the high of the month level until 1 p.m., where we have a reversal set up at 1 p.m., and that market doesn't really come back that much. Remember, we're counter trending a breakout. So traders that were looking for a reversal, you're counter trending a breakout at a new month. 3 days of breakout traders in the markets. We have higher highs now heading into Free Cash Friday and non-farm payrolls Friday. The emphasis I want to place on this is that traders were looking at this as a first red day. We have a down closing day in a market that has had 3 days of consecutive breakouts. Now, most importantly, though, how did price behave on the day? We have a market that has dumped down and gone into consolidation beneath the highest close of the month, the highest high of the month. We made higher highs prior to dumping down late in the U.S. session in the afternoon. We closed below the low of the day made in Asia, but we're still trading down into a market that has been driven by higher time frame buyers. Now we could have this market break down again the following day and pump up. We haven't broken any daily low of day levels. We are still in breakout. This is a down closing day against a breakout. Now I want traders to understand this. 3 days of breakout traders in the markets is a signal day. How does price set up on the day? We can get trend trades in a strongly trending market. Doesn't always have to be about trying to counter trend a market because it's been in breakout. Understand that. We can trade in line with the higher time frames. This is a trend trade, New York Open, pin hammer at the New York Open on the higher time frame. Reinforcing the concept of simplicity, 2 types of templates on the day itself. A well-engineered dump and pump template. Non-farm payrolls breaks out of our smaller rectangle at the low of the consolidation on Friday. When New York opens, basic model for trade entry criteria, page 29 in the playbook is met. Stepping back and keeping things simple. Rinse and repeat. Scale it up in size. A trend continuation trade on the backside of the week. Day 1, day 2, day 3. Free Cash Friday after non-farm payrolls. We're looking at gold, and I want to put the bigger picture in place to answer some other questions that came up this week. One excellent question from a trader was, can you have 3 days of breakout traders in the markets without it closing in breakout? And I said yes, and this is a great example to understand that. The previous Monday, we had a market that broke down from the high, closing in breakout short on the downside. And that started off putting in a peak formation low before breaking the high of Tuesday on Wednesday. That was our first day of longs triggered into the markets. So understand, we had broken low of day levels. That was the first day that had broken a high of day level. Breakout traders are in the markets, but it closed inside of Tuesday's range. The following day, we broke a low of day level. Now, this is where traders need to understand. They immediately start a new count because of misinformation and misguidance. This is not a new count. I'm just going to highlight this to explain this to traders. This has formed a peak formation low on Tuesday. Peak formation low and then went higher. They've gone higher on Wednesday, triggering longs into the market, breakout traders long. They're taking traders down into the peak formation low that was made on Tuesday. Higher highs dumping down into the peak formation low before resuming the uptrend on Friday, triggering day 2 longs into the markets. That's the second time a daily high of day level has been broken. And that ended our week, our Friday. Monday opened on a gap, breaking a low of day level again, putting in a peak formation low in a new month, a new week, new timing cycle. And you'll notice before it came back and closed back in range, we traded higher than the previous Thursday's low of day level. We made peak formation low on the Tuesday, higher highs, dumping down, trading higher on Friday, opening on a gap. So understand we had longs triggered into the market. They've immediately gone down on Monday and put in a peak formation low, closed in range, and broken the high of day level for the third time on Tuesday in the new month, the new week, the new timing cycle, but closing back in range. Third break of a level, but not taking out the high made on Friday, the peak formation high that was made on Friday's breakout. That's the midpoint range of the week. And on Thursday, we break a low of day level. Now, thesis is we've had 3 days of breakout traders triggered into the markets. Our third break hasn't been as strong. We have a lower low now on the inside, on the new month, new week, new timing cycle on the backside of the week. Lower low made on Wednesday peak 1, Thursday peak 2 and 3 into our timing window, US session. Train your eyes to move horizontally at the levels, again coiling at closing price into our US session. And when we look at our chart, we had major red news at 8:30 a.m. and our 9 a.m. window engulfs inside of our already locked in thesis of high of the day already being taken care of after 3 days of breakout traders triggered into the markets against a higher time frame selling situation. So an example, as one trader asked, does it have to consistently close and breakout? No, but that's an example of where we have traded back into higher time frame sellers. And when we have our timings, levels, behavior of price, train your eyes to move horizontally at the levels. There are only 3 levels. It's not about little 1-minute pushes, little 1-minute bars. What is the larger setup, the actual setup, the rinse and repeat setup where it's easy to make money on? And when the market sets up into that window, how does price behave? Where do we manage our risk? What levels are we getting in at? Is there major red news? Knowing when to nail and bail and knowing when to hold till close. An opportunity where the market now may be going back down to our low of week level. Going back to our original template. Now we have a close as a first red day. Where's our low of week? Now an excellent observation from a trader was, well, it was a first red day signal. And my response was yes, and the first red day blew off and took the low of the week level out. Once that level is taken out, that first red day trade is done. That was an all-in collapse follow through for traders who held or for Asian session traders who participated in the explosive move back through the low of the week and into higher level longs from the previous week. Follow through in the Asian window for the pump and dump template, 3 days of breakout traders triggered into the markets against a higher time frame selling situation. Now, once this market clears, you notice horizontally at the levels a 3-peak reversal pattern in our Asian window on Free Cash Friday. And as I commented to one trader, we're back inside now. If you're not participating in either one of these moves, there's a high probability that after non-farm payrolls, they will just close sideways, chopping traders up who just love gold, and that's their favorite. They want to trade it. But now trading sideways into consolidation in the closing range of the week. A non-farm payrolls week, a pump and dump 3 days of breakout traders template in the markets. First red day signal, if traders weren't already in the markets. On Thursday, they had the first red day signal for Asian session parabolic collapse in the follow-through on the backside of a pump and dump first red day signal template. Next up is West Texas. And on Monday, we made a high, we made a low, and that established our opening range. Tuesday, day 2, expanded the range. Now, again, there's opportunities in different sessions. Obviously, we had a New York session shorting opportunity in oil. On day 2, we had a Asia-London parabolic opportunity that continued in the U.S. window to expand the range. So understanding that if you're participating in this later in the day, to recognize the larger time frame template setting up and not just trying to catch the high or counter trend to move because it's outside of the high of week level in a new month, new timing cycle. Day 1, day 2, day 3 now, we're at the high of the month, the high of the week in a market that is closed in breakout. We had 3 peaks that formed a lower low, and then 9 a.m. Traders had the opportunity 9 a.m. for the reversal, reversing on Wednesday, day 3, the midpoint range of the week, collapsing down, an ACB opportunity collapsing down. Remember, we had Asia, London, and New York on day 2 trading higher in each of the sessions, buying high. If traders didn't lock in their money, they're the first target on the way back down. Just coming back to a previous question, a 3-session setup, the high of the week is made in the U.S. window. Asia's inside again, London trading higher, session 2, and New York pumping back up into that peak formation, high of the month, high of the week, made on day 3 for the reversal in the New York session. A day 3-session setup, 2 types of trades on day 3, trend trades or reversal trades for the ACB first red day collapse into the close. Pump and dump over a larger time frame template, a later US session continuation trade on Thursday, and London, the collapse into the low of the month, low of the week level, new month, remember, and US session traders caught in a little chop, low-hanging fruit later in the day if traders decided to continue to trade that short. But the opportunity on Wednesday was high of the month, high of the day, high of the session, a 3-session setup on day 3 on West Texas oil. Talked about front side of the week, nail and bales, and potentially traders in the Europe London Open, end of Asia, the parabolic range expansion on day 2. Day 2 on the front side typically expands the range, but we have a pump and dump template on West Texas oil. Right out of the playbook. Keep things simple. The reason I'm harping on this today is that I want to get back to the understanding of what garbage trading is. Garbage trading is when you keep focusing down on the minutia. You want to master the minutia, little pushes, little gaps, little sweeps, and you miss the larger, bigger picture for easy all-in ACB trade setups, easy money-making trading setups. Types of templates, dump and pump or pump and dump. Reinforce to traders, simplicity, a basic model for trade entry once you have a setup. If you understand what these signals mean, make things as simple as possible. The more you focus on minutia and convolute it with a lot of other material, the more variable your results will be. Simple, rinse and repeat setups. First red day, first green day, inside day signals, 3 days of breakout traders triggered into the markets. Basic templates that show up week in and week out. Keep it simple. Master some simple templates. Sit on your hands in between. Don't try to catch moves and grab highs and take 50-50 trades. Focus on scalable opportunities where you virtually can't lose on. And if you don't see a well-engineered playbook best trade setup candidate, don't trade at all. Sit on your hands until the money is laying in the floor over in the corner, as Jim Rogers says, and all you have to do is walk over, bend down, and pick it up. Leave all the science projects to the geniuses and the smart people. Focus on simple, rinse and repeat, easy money-making trading setups. Have a great day, traders, and may the markets go with you.